Hi again, this is Rick with AmazingAccuracy.com, and today is October 7th, 2011. It is currently 1:40 p.m. Chicago time. Today we're going to look at soybeans, and currently you're looking at the weekly chart of soybeans. Today is October 7th, which is Friday, so that ends this week. As you can see, the low of this week, 1152, has found support on time price squaring. But what is more significant is that it is within one price bar of when we anticipate a weekly swing reversal, a weekly swing bottom to occur. And you can see that here the indication is by the red diamond, and it's just this week is just one bar off, so that makes it highly probable to become a weekly swing bottom. In other words, the low of this week is likely to hold as prices move above the high to thus confirm this bar as a swing bottom. This tells us that we are in a potential buying mode for soybeans at this time. Let me turn to the daily chart. Before I do that, really quick, I have the seasonal data report shown here. This is part of my provisions charting software that comes with our premium membership, and you can see that following a significant low situation for the week of 9/30, it shows that from 10/7 up until November is seasonally bullish. That means historically at this time soybeans is usually bullish. Not always, because you can see the percentages here, 52, 62, 67. That would be the bullish ratio to bearish. So out of 21 years, 14 years were up, 7 years down, so forth. That's what this says here. So anyway, it's just telling us that seasonally it has been usually more bullish than bearish on average. Okay, let's go to the daily chart here. Now, the daily chart, as you can see here, has entered into the next short-term turn date period. The last one was right here. It produced that the actual 1152 bottom of soybeans this week. Prices rose for 2 days, and then today it dropped. But held the bottom by 1/4 of a cent. The low today was 1152.25, and this bar has not been updated for today yet, but the closing price is actually for today so far showing as 1158.25. So anyway, trading is pretty much over today for this week. The low has held, and it now has provided us with a unique opportunity because, like I said, the potential for a weekly swing bottom for this week, not next week, because then it would be outside the realm of this diamond here, this week for that low to hold and for prices to rise. So we would expect these two lows here, it's a double bottom, to hold next week and for prices to rise above the high of this week, which is showing here as 1189.75. So we know that at the very minimum we should see prices rise above 1187.95 or whatever it was. 89.75. That let me go back there because short memory here. 1189.75. Okay, so we should expect prices to rise above the high of this price bar here, because that's the high of the week right there. There's 5 price bars in a week, okay, and that was the highest. So we should expect prices to rise above that. Now the high here is 1170, so you know that it is at least 19 cents that we have as a potential objective. But I'm not looking for just 19 cents. While that is a really good amount of profit in soybeans, we're definitely looking for more. And here's the seasonal tendency. As you can see, it's blue across the board, going all the way up until 1120 here before it pulls back. That's the seasonal tendency. So we have that in favor of the buy side as well. Also looking at the oscillators here, you can see that we have a bullish divergence pattern in the stochastics. If you'll notice, the lowest part here of the stochastic, down here below the 20 line, is where we had this low here, this brief rally that occurred when we were expecting some kind of change in the trend here. So we had a correction here, and we can see where that level is down here in the stochastic. Prices then went lower before bottoming again here within this next diamond period. And we look at the low here on the stochastic and notice that the low here in the stochastic is actually higher than it was here, although the price is lower here than it is here. That is a bullish divergence. They are opposing each other, and that is good for buys. In the MACD, you can see the histogram, the red bars you see here have formed the bottoming, then formed another bottoming here again, and has been now moving to the upside. The potential is high that it will continue to do so and cross above the zero line, thus turning into these green bars. When that occurs, that's when the signal lines cross down here to the moving. The blue will move above the red. That is definitely a strong buy, especially when the MACD signal and oscillator lines are so oversold right now. For them to turn up down in this area here is much like where you can see they were overbought way up here, and you can see where they crossed down and the top that we had during that period. So this is also supporting the buy side. So what can we do here if we want to buy soybeans? Well, you could just buy it at the market, and you could put your stop loss below the double bottom here because we're expecting it to hold. If prices were to break below this double bottom, our expectations would then be null and void, and we'd want to get out with the least amount of losses possible. The other way that we could approach this, the way that is taught within my membership, is to first allow this bar here to confirm as a swing bottom. And for that to happen, prices must rise above its high. The high today is 1170. So then we would look on Monday for price to hit 1170 and a quarter in the November soybeans. If price hits 1170 and a quarter without going below the low of 1152 and a quarter here, then we have a buy. So one way is, of course, if you can watch the market, is to wait for the market to open and hit 1170 and a quarter to go long, and to just go long. Put your stop loss below this double bottom here. The other way you can get in, if you happen to work a job and can't watch the market, is to simply put a order in to buy at 1170 and a quarter on a stop, on a buy stop, so that if price hits it, then it will take your order. The only problem with that, of course, is if the market opens gaps open above your price, you end up getting a worse price. Usually with buy stop orders, I like to see that the market has opened within the range first. That means it's opened between 1170 and 1152 and a quarter. We want it to open somewhere in the middle. Then call or dial into your broker and put a buy stop at 1170 and a quarter to go long here, and then make your order that if that's filled, then your stop loss is automatically placed below the 1152 price area here, the double bottom. Now, the short-term objective for price is to go to the October 17 time period, roughly. Now, the cycles that I've been looking at show that the potential is strong for the market to continue rising up until November. Okay, so that would be a good overall 1 month rise in soybeans. But the initial rise we're looking at is around October 17th time period, where we might get a correction, perhaps down to the 21st, and then continuing up to the end of the month. Now, don't write those all down and say, okay, I'm going to get out at the 17th, and I'm going to get back into the 21st, blah, blah, blah. No. When you get out too far into the future, I mean, there's too many things that can change. So, the short term now is we anticipate a move up until around the middle of October, perhaps around October 17th. But as we start moving in that direction, it's always good to trail your trade with a stop. And I leave that decision up to you as to how much you wish to trail behind your trade. Okay, well that's it for the outlook on soybeans, the trade the trade opportunity that we have based on cycles, F dates, and of course our common indicators here. Thanks again for watching my video. If you haven't already done so, please subscribe, support my YouTube channel, and we'll continue to put out more videos for you so that you can also time the market with greater precision. And also visit my website at amazingaccuracy.com. A lot of good stuff there. Free newsletter as well. Okay, thanks for watching and have a great weekend.